Hey guys, today's interview is with Andrew Butt of Enable.com. Andrew has a pretty fun story of moving his family from London to San Francisco, road tripping across the United States in an RV, all the while pitching investors. Andrew spent a lot of time getting to know the investors before taking their money. If you like this kind of content, hit that subscribe button, leave a comment in the comment section, and then email us at info@foundersuite.com. And I will send you a list of these 60 plus most important questions that you should be asking investors. These are the questions you should be asking investors to really understand how they work and to really get to know them before engaging with them and taking their money. So hit the subscribe button, leave a comment, email us at info@foundersuite.com, and I will send you that list right away. Till then, enjoy the chat with Andrew.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Andrew Butt of Enable coming to us from Telegraph Hill in San Francisco. How's it going?
Going very well, thanks, Nathan. Great to meet you.
Beautiful weather here. You're not a native San Franciscan, I can already tell from the accent. Are you enjoying this mid-February weather? Okay.
Absolutely. Yeah, some of my investors keep reminding me that I moved here to hire great talent, and I actually say I moved here for the weather. That's the real reason.
You're UK originally?
Yes, absolutely.
London, or where are you from?
Outside of London, so we have our offices in Stratford-upon-Avon, which is Shakespeare's birthplace.
Cool. That's excellent. Well, we'll get into that, like kind of moving all here, but for now, let's get into what you guys do. What is Enable?
Sure. So Enable is a platform for distributors to use and retailers across about 50 different vertical sectors, pretty focused on physical goods. So whether it's construction, automotive, electrical, can even be food, health and beauty, all those kind of products. And what we find is just distributors are basically the sales teams for manufacturers. And they have a lot of trading agreements in place with those manufacturers and lots of incentives in place in the form of rebates, where they earn really all of their margin. So it's a very important kind of series of agreements and incentives. But believe it or not, they're tracked in Excel spreadsheets. And so we have built a SaaS platform to turn all of that into a modern cloud-based solution.
So let's take a real simple scenario or example there. You've got window manufacturer that's you tell the story instead of me trying to guess at it. Sure. A little scenario.
Yeah, so the scenario is you will have, let's say, construction. You will have a manufacturer of, let's say, drywall, okay, really big manufacturer of drywall, and they need to get that all across the US into commercial projects to build new offices, into house building projects to build new houses, and they do that through distribution because they might have 2 or 3 factories across the whole of the US, and they need to be very close to customer and meet individual customer needs. Mm-hmm. So they will go through distributors, and they need to have very, very joined up incentive agreements, pricing agreements, essentially, to make sure that they can service customers and win, in the market and be competitive. So you've got distributors partnering with manufacturers to serve customers, and these kind of trading agreements to make all of that happen.
Okay, so these distributors are then also resellers, typically?
Yes, Absolutely.
And so this is helping them manage. Are you selling to the manufacturers or to the distributors? Who's the actual customer?
So we started selling exclusively to the distributors, and they make up a lot of our customer base. But the first thing distributors do is they actually invite their manufacturers to access the software as well. And then some of those manufacturers want to become full customers. So we are getting into manufacturers as well.
Okay. And so then once you've got these both sides of these parties on board, they're now using this to manage, like you mentioned, rebates. So
Yes.
What's the scenario in drywall on rebates? What is that?
Yeah. So what will happen is a manufacturer will say, we want to hit a certain value or volume within, let's say, the month of February, and we want to get certain product lines into a particular part of the US, And if you can hit all of these things, if you can hit the value, hit the volume, then you'll get an extra 5% rebate effectively. So it could be a big amount of money, and it's all about driving behavior and trying to kind of get the distributors to purchase the right products at the right time.
Got it. Interesting. Cool. And you said they were doing this all spreadsheet beforehand, so I'd be tracking the rebates and then paying out at the end of the month or whatever.
Yeah, and exactly. And this whole kind of intent of driving behavior has never really worked very well because people just can't track it properly. So they just go about doing business as usual. And then if it comes in, then that's nice to have. But often it doesn't come in because they're not tracking it properly. So it's actually $1 trillion, believe it or not, $1 trillion of rebates, which is being managed poorly.
Interesting. What were you doing before this, or where did this idea come from?
Sure. So, I mean, I've always been fiddling around with building software applications, since really the late 90s, believe it or not. It's quite a long time. I've built 3 companies. So I've been involved in building engineering services companies where we build software for other people, and built a team of around 100, largely engineers in the UK. And then I've also had 1 or 2 spin-offs where we've kind of built a product, and then that's built momentum, and we've kind of spun it off as a separate company. But this particular area of rebates came about when I met my co-founder. And my other passion in life is flying, so I was learning to fly helicopters, and I was trading my programming hours for some flying lessons. It's very, very generous helicopter flying school. And I met my co-founder, Dennis Short, and he was running a very large distributor in the UK, which is now the largest of its kind. And we got chatting, and this was a real challenge and opportunity for him to say, if we could manage this better, we could really increase our sales, we could serve customers better, we could make more profit. And that's where the idea came from to build this SaaS platform.
What industry or vertical was he in? Like, where'd you start?
Yeah, so he is in health, beauty, and household. So he's working with brands like Procter & Gamble, Unilever, Gillette, and supplying household goods.
Okay. But now this is a fairly universal, like, do you cover all industries, verticals?
So yeah, we've identified, as I say, more than 50 industries, and we've gone deep into some of them. So for example, construction, we've done a huge amount in. Automotive is growing rapidly, and a few others. But as a kind of Series A company, we're still just scratching the surface, and we continue to see how big the market is here and how big the opportunity is. But we're being quite careful about how we establish beachheads and then move from there.
Automotive is the one that, when I think of rebates, that's the one that kind of instantly jumps out to my mind, right? Because auto manufacturers constantly offering $3,000 cash back if you purchase now. I guess that's a pretty good model there, right?
It is, and I think people are aware of rebates for consumers, and that's can be quite successful. Our focus is really the B2B rebates that literally are between manufacturers and distributors, and also manufacturers and retailers. So it's very similar, but slightly different.
Okay, interesting. How did you fund this in the early days? Sounds like you're programmer, technical. Did you guys launch bootstrapping, or how'd you fund this?
Yeah, we did, absolutely. Yeah. So our main kind of business when we launched this was a services company, and we were building software for other companies and charging a consultancy kind of fee to do that. And then we use that income to fund the early stages of our product. And we did that right up until a couple of million of ARR for the product. And sometime before that, I had realized that this is a huge opportunity, and we were not going to be able to, if we kept bootstrapping, it would be not fast enough. But that was the initial approach. Yeah.
So let's talk about raising money. So how much have you guys raised, and how many rounds?
Yeah. So we have raised $16 million. It basically all Series A. So we bootstrapped up until the Series A. We did an initial closing of $13 million in Q1 last year, so literally 12 months ago. And then we had so much interest, which I can talk more about, that we decided to take on another 3 million on top. So we've done 16 million of Series A funding so far.
Let's talk about putting that round together. I think you were in the UK, and then you decided to hey, let's go raise some money, so let's go over to Silicon Valley, or what's the story?
Yeah, sure. No, it's a fun story. So, I mean, first of all, we were getting a lot of interest and winning customers in the US and Canada, even though we weren't here. So it wasn't just because of the fundraising. We saw that the market, the biggest market for us is North America, and we were doing okay servicing that from the UK, but it clearly we were going to do much better by moving here.
Yep.
So and then I thought, if I'm going to move anywhere in the US, it has to be Silicon Valley, because I can't quote the exact stat, but let's say 80% of the world's most successful SaaS companies are still headquartered here even today. So I came over here and I kind of told everyone, yep, I'm going to move to San Francisco and knock on some doors and raise a Series A. And yeah, the general feedback was, that'll never work. You can't just turn up as an unknown person from an unknown company from a foreign country and raise money. But that is what we managed to do.
Go into the details. So you book a flight and then what?
Yeah. So I first came out here seriously, if you like, to look at this in like the back end of 2018. So over 2 years, just over 2 years ago. And I'd been on a Silicon Valley study tour a couple of years before that with a respected UK kind of CIO type character. And these study tours, you meet quite a few VCs and they introduce their portfolio companies. So when I first came out here properly in late 18, I went back to those VCs and I said, look, I'm not raising now, because that was true, but I am planning to raise. And I learned a lot about what was really needed to have a successful raise, and very quickly learned that growth rate was really the most important thing, showing we're growing very fast, even though we're very small. And with your capital, we can sustain or accelerate that growth rate. And to be honest, after that, as let's say early 2019, our growth rate wasn't amazing. We were not doing amazingly well, but we really kind of focused and kind of increased that. And so by the end of 2019, we were on the trajectory. We were small, we were around 2 million ARR, but we were on the trajectory. So I then came back in November 2019, so let's just call it 1 year later, and that's when we kind of started the actual process. And I'll pause for a minute just in case you want to steer me in any way, or should I just carry on?
Just real quick on the growth rate, like, did you have a specific number that people were telling you, and whether that's month over month, or what was that growth rate you sort of realized you needed to hit?
So what I had in my head was that the clock starts ticking really once you hit 1 million, and you can take time to get to the first million, but once you hit 1 million, you then need to be really on a 3x curve, and you need to get from 1 to 3 million quickly, and ideally in a year. So that's adding about 10% per month to hit that rate.
So that was kind of your benchmark, like once we hit 1 million and we're growing at 10% month over month,
yes,
we're sort of a fundable deal. Yeah.
Yes, exactly. And I really wanted to be around the 3 million ARR mark when we raised the round, because I was thinking, like every founder, about dilution and trying to get a good valuation. So I wanted to be, at 3 million ideally.
Awesome. So carry on with the story then from that.
Yeah, sure. Yeah. So let's just say around November 19, we were at, let's call it 2 million. So we'd gone from 1 to 2 quite quickly, but we were at about 2. And let's say we were adding 10% a month. That was about right. So I got introduced to some great VCs through our legal counsel. We'd met a firm who were very good, and they said they could make introductions, and sure enough, they did. They got us into partner meetings. And my message to these VCs was, look, I'm about to move here. I'm going to be here by January, and I'm going to raise in Q1. So this is November now. And I said, I just want to take you through the business and let me know if this is something you might be interested in, and I'll be back. So that's how we started. And we then went through the usual roller coaster. So I probably met, say, a dozen VCs in November, and everyone said, well done, congratulations, we love the business, we're really interested. And then next stage, of course, is you start getting all the no's coming in. No, send us your data. Oh, a good sign. But then you start getting those coming in. And then we started getting kind of strong interest coming in, and the strong interest was everyone that was interested just wanted to move quickly. So they said, we really like the business, we like what you're doing, and we don't want to wait until January, let's get going now. Which comes back to, I was literally in the process of moving moving my wife and all of our things from the UK to the US. And everyone said to me, don't try and move across the world and raise money at the same time, because both are quite stressful. But of course, this is how things go.
And okay, so I think there was something about pitching investors from the Queen Mary or something. Or
yeah. So
that, yeah.
So I'd kind of got my place, got my apartment set up here in San Francisco, and then we were heading back. This is kind of now, if you think about it, December 2019, heading back to the UK to literally pack all of our things and come across. The Queen Mary 2 was because we brought our animals with us, and my wife really was not keen on flying them long haul. So we said, let's come on the Queen Mary 2.
What animals are we talking about? A dog and cat?
Two dogs and a cat. No, not a horse. We actually did have alpacas in the UK, believe it or not, but cool. we didn't put them on the Queen Mary 2. We came over on Queen Mary 2 and then took an RV, and we drove here in 4 days from New York. But what basically happened was in that kind of mid-December period, some of the VC firms said, look, we've got our last general partner meeting of the year on Monday. We really want to do this, and time is the killer of deals. That's the famous phrase that I always that sticks in my mind. We want you in front of our general partners on Monday. And I said, well, on Sunday I'm setting sail from Southampton on the Queen Mary 2. So I literally be in the middle of the ocean. But I did pitch one particular firm from the Queen Mary 2, and they ended up investing in the Series A. And then I pitched another one from the RV, literally in a parking lot when I was driving. And we did all the legal work for the initial kind of diligence, if you like, and we did end up signing a term sheet while we were driving across the country. That is a true story.
Have these guys met you or not?
Yeah, once. So I met them in November once, and then it was all remote after that.
Got it. Fun. Is the Queen Mary running on satellite phone, or how are you pitching that?
Yeah, it was not good. It was not good. The connectivity was poor. And I'd got various backup options. So one option was I recorded myself presenting on Loom, I think it was, and I said, just play this. I'll dial in from a phone, and then you can pause it and ask me questions.
Oh, fun.
But in the end, the connectivity was good enough, so we did get through it. But
that's clever. That's a good idea. Yeah, if you're not sure if you're going to be connected enough, record it and then pause and ask me questions on the phone. I like it. Yeah. Getting into a few details here. So, like, you said you pitched about a dozen funds. Why not? And that was in November-ish. Why not wait until you actually got here and then do a full-on roadshow? It sounds like
I think I was just very inexperienced, for sure. So I was thinking, I wasn't sure how long it would take or what would happen, or I just hadn't ever done it before. So I genuinely thought I would maybe speak to 12 and then out of that maybe have, say, 4 who were very interested and would say, yeah, great, we want to participate in the round. So come back when you're here in January, let's get going. But the reality was I learned quickly people either just bow out or they want to go now. There's no middle ground.
Yeah, that's good. But only 12, 12, and then how many kind of put forth offers or term sheets? Yeah,
quite a few. So I'd say, look, to be honest, I probably did meet more than 12 in total, but I'd say there were 12 kind of very warm introductions where I had someone that walked me in and they were very, qualified opportunities, if you like. And then probably around that, there were some other bits and pieces. But from 12 proper detailed conversations, we had about four sensible offers.
Yeah, that's a big hit rate. The stats I see a lot are 5 or 6% of folks you talk to turn into an offer. You're hitting 30% basically?
Yes.
Am I doing that math right?
Yeah.
Something like that. That's great. You want to give a plug to your law firm that made a lot of these intros?
Absolutely. Yeah, no, Wilson Sonsini or WSGR, great firm, very well respected, know exactly what they're doing. So haven't looked back at all with those guys. They've been great.
It's great that it worked out like that. I hear mixed things about like leaning on your law firm for intros. Like sounds like some are helpful, some are not. It probably depends on, I would say, like, is this, if I'm the attorney at big law firm, is this deal going to make me look good to investors or not? It sounds like you had the growth right, that probably made Wilson want to step up and hustle
Yeah.
for you a little bit. Am I right? Yeah.
Absolutely. And I think it really comes down to those personal relationships, doesn't it? So I know the partner at Wilson Sonsini who introduced me to one of the investors that invested. They were very good friends. I didn't know this at the time, but they were very good friends and had worked together for a long, long time. So I agree, if it's just like an anonymous law firm introducing to an anonymous VC firm, I think it wouldn't work. But if the partner at each firm has a strong relationship, and you're right, if the company is good, then it certainly does work.
Now, talk about funnel a little bit more. I mean, there's probably I think in Founder Suite, we've got 6,000 SaaS investors. If you search under SaaS, there's 6,000 or 7,000. You talked to 12. Did you ever think about talking to 20 or 50, or were you,
Yeah. So I think, first of all, I was and remain very, very happy with what we achieved at that Series A, and so it's really a great place and no regrets at all. I think next time, and we will be raising again this year, then we now have been through the process. We know so much more than we did then, and we definitely will run a much more detailed process and talk to a lot more firms, and also get them all going at the same speed. I think before it was a little bit informal, where I met a couple of firms one week and then another, and then this challenge of trying to get everyone moving at the same speed is difficult.
Talk about that. I think the quote you mentioned, time is a killer of deals. You've got 12 firms you're sort of going through quickly and shepherding to the offer letter. Did you do anything in specific? This is around holiday time, so yeah, anything other than pitching them no matter where you were?
So not really. I think what I learned was there's the kind of initial phase. So you have the first meeting, and then either you get invited back or you don't. So that's quite easy. I think you then get to the stage of, I found getting to the stage of being asked for data in some of those 12 conversations, and data is provided, and the firms take a few days to look at it. And then what you find is you have, let's say, 4 firms who are coming back with lots of follow-up questions, and it's just moving forward, and then you are really motoring, and let's say there's 4 firms doing that, and it's feeling like it's definitely progressing towards a term sheet. Then I'm trying to align them and to slow some people down, speed some people up to go to, that's when it all kind of starts happening. But we got one term sheet which was just poor, and then the rest were all very good and in a very similar ballpark. And then it's about referencing the firms, and again, the good firms like the ones we worked with, they're very proactive in introducing CEOs that are in their portfolio. I actually did some cold outreach to other CEOs that they hadn't introduced me to, but I just reached out to them anyway, and I could see that I was dealing with really professional firms who were giving me a very good market kind of set of terms and valuation, and good references.
Talk about that a little bit. That's interesting. You reached out, when you're down to maybe your top 2 or 3 picks, you're reaching out cold to founders that they've invested in and asking them what? Yeah,
so asking them really about the partner that they work with, what the kind of highs but particularly the lows have been. Asking them about, have they had bad quarters as well as good ones, and if so, then how did the partner behave in those bad quarters? And just kind of what would they change if they went back? Would they partner with the same firm again? So those are really some of the questions.
Yeah, no, those are good. When you were kind of, like you said, speeding up some firms, slowing others down, were you subtly or even explicitly sort of name dropping or hint dropping that, hey, I just got a term sheet from XYZ? Did you play them? I don't want to say play them off each other, but you kind of get that competition going. Anything there?
No, not really. I think there were a couple of firms that I particularly wanted to work with, and they came forward with very good, strong terms. So I was happy with that, and I didn't do any of that playing off. And I always had in mind what kind of terms I wanted. So I was quite clear in saying to people, this is what I'm looking for, but I didn't specifically name drop to say, I have or have not got those terms from a particular firm.
What were some of the main terms you were focused on? Was it just valuation, or was it other terms?
Yeah. So I wanted very standard terms, and I learned that most VCs and good professional firms now are very standard, and I won't go into all the detail, but things like the liquidation preferences and so on are pretty standard. So definitely keen to make sure I avoided anything which was non-standard and not founder friendly. That was one thing that was important to me. I think the size of the board was one thing that was important, because being bootstrapped, my co-founder and I had complete control, and there was no other board members. So, for example, we were looking at one configuration of 5 board seats, where we would have the 2 of us and then 2 preferred seats and an independent, but we were keen to do just 3 seats, just literally add on 1 preferred to the 2 of us, and so that was quite important to me. The option pool was also important because we didn't have one, so and I'm not advocating this, by the way, but basically nobody had equity apart from the co-founder and me up until we did the Series A, and so investors were quite keen to create a significant option pool to try and catch up, and of course I wanted it to be a good size, because I wanted employees to have a good stake, but not sort of disproportionately large. And then you're right, valuation is clearly always important as well, and both ways. So being a strong valuation, but also not being too huge. I mean, I didn't want to oversell.
I don't think we've mentioned the names of the firms. It's public knowledge. You want to mention who?
Oh, very happy. Delighted to. So Menlo Ventures led the Series A, and they've been brilliant. And Steve Sloan is on our board. So that's been excellent. And also Sierra Ventures, they also came into the initial closing, if you like, and invested. And Tim Galleri joined us. So those guys are just brilliant. We then did, as I say, a bit later, we opened up and took on some extra capital from a series of people, and what we found is there were quite a few investors who wanted to write small checks, but basically we couldn't fit them in, because when we got down to Menlo and Sierra both being great firms, they both wanted to put big checks in, and we just couldn't bring in anything smaller. But when the pandemic struck and we all agreed, look, it's good to have cash on the balance sheet in a pandemic, then we started taking in some smaller and maybe more not strategic, but just people we wanted to be close to us. We brought them in as well.
Did you you don't have to share exact details, but did you give those additional folks the same terms that the venture firms got, or did you have to do a special deal for them, or how do you structure it?
Sure. No, I mean, all I'd say is we literally just did a small extension of the Series A stock. So it was in a very close time frame. So it was really just after, almost immediately after the initial closing by a short space of time. And we didn't want to rewrite all the legals, and so we didn't, for example, we just didn't change anything, and just brought a few more people in, and then said, right, that's it now, we're done.
Did you have to negotiate that with the VC firms?
I wouldn't call it a negotiation. It was we're all unanimous, because we just all agreed that if you think back to, say, March time last year, nobody knew what the world was ending or what was happening. So everyone said, look, to take on an extra 3 million of capital, let's just make it quick and easy. We're not changing anything or going backwards and forwards here. It's just a quick transaction. So everyone was on board with that. Yeah, no, that's good.
And these were mostly individuals, like people that had just sort of watched the business, or did you actually go out and source new investors, or what?
I wouldn't say I particularly sourced, because I already had a long list of people who were very keen and almost disappointed they couldn't have invested in the initial closing. So I didn't go and source anything extra. But yeah, they were basically individuals and a couple of kind of syndicate type, but small, quite specific small firms.
Again, getting into the weeds a little bit, but did you put them all on like an SPV, or did you roll them up into a single entity for the cap table, or are they just individuals?
Yeah. We did not. So there were just several new entries on the cap table, but we were mindful to not make it too numerous, to keep it tidy. So there were several entries, but not many.
Got it. Cool. Excellent. I won't keep you too much longer. Any other tips we haven't covered for, first time UK founders coming to Silicon Valley, or any advice you would give your younger self if you were doing this all over again?
I think it's actually moving here for me was important because, I hear lots of stories, and some are very successful, of people that have raised in Silicon Valley without coming here, without moving here.
Mm-hmm.
And that's definitely possible. But for me, it was important to really be here and to show commitment, and also show commitment before raising, because this thing about, look, if you fund me, then I might move here, I think
sure.
is quite weak. So to say, look, I'm here and I'm not going anywhere, and I'm now looking to raise. So that was one thing. I do think that certainly, running a process where we are casting the net wide, and then going at a specific time, going with a specific timetable, getting the data room in order, before really the first meeting, for example. We didn't really have any of that, so we were kind of putting things together in real time, and it was fine. We got through it, but we'll do that better next time. Have it all completely ready to go, and then drive the process and follow a clear timetable.
A little bit of a tangent, but you moved to SF, and then a couple months later, COVID hits. Everyone goes virtual. Everyone goes remote. Now, if you listen to the Twitter verse, every VC is moving to Miami or Austin, and people are fleeing San Francisco. Are you still bullish and long on SF? Which is almost a contrarian view these days, or what are your thoughts?
No, I am. I do think the ecosystem is still great here for sure. And, we, as you said, I was the only person in the US from Enable a year ago, but we've now got a good sized team and quite a few in the Bay Area. So I've found that from a talent point of view, the talent is still here, and there's still a huge number of VCs here. And it's just, so I think it's still a real positive, certainly for the time being, to be here. I've got no plans to move away. In fact, the opposite. We're still building things here.
Are you finding talent has become more available here? Like, are you finding a deep talent pool? Maybe people who, I don't know, have been cast aside from COVID. I don't know what the right phrase is. Yeah.
I don't think so, and I haven't got much to compare it to, because we haven't, weren't hiring much. We weren't hiring at all before COVID in the US. And some of our recent people we've brought in a fantastic revenue leader who has had a lot of success in previous SaaS companies, and so that, for example, has been people have kind of seen him, and that's been a big draw, I guess.
Yep.
So there's too many moving parts, but I haven't specifically seen more talent become available in SF.
Got it. Good. Excellent. If people want to learn more, it's enable.com. Easy name.
It is.
What was enable.com being used for before? I'm assuming you purchased this.
We purchased it, and we got we got a very good deal on, and had a good negotiation on that name a while ago. But I'm very pleased we have it.
Yeah, it's a good name. Good name. Nice. Awesome. If people want more, enable.com, anything you want to promote or plug, any open job recs or anything at all?
Well, we are hiring in all roles. So please, if you look me up on LinkedIn and look at our Enable page on LinkedIn, all of the social media links are on enable.com. So as you say, Nathan, that's the easiest one to remember. But go to enable.com, look at our social media, and you'll see all the job opportunities and many more things there.
Awesome. Do you still have a presence in UK, or are you guys over
Absolutely.
here?
No. So we've built our engineering, we've built a lot of product management, we've got a big team in the UK, and that's very much a long-term commitment, and we're still growing in the UK as well.
Are there good engineers? I assume there are. You've got great universities there, but is there a good, you don't think of the UK so much as an engineering or hub. I don't know. Maybe I'm completely wrong in that. I don't know.
I think there's plenty of companies with very strong engineering teams in the UK, and as you said, great universities. So we've been very successful hiring great graduates out of university that have the caliber, have the attitudes, and the brain power, and maybe not the experience. And then we've kind of taught them ourselves. So it's a great place to build software.
Excellent. All right, Andrew, thank you very much. Enjoy the sunny weather here in San Francisco, and we'll catch you after your next round. We'll hear how you put a process in place and run a process for your next one.
Absolutely. Thank you, Nathan. Great to talk
Over
to you.
now. Cheers.